Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we're going to solve April 2023 University question paper under the subject Innovative Financial Service. Again, a very important video for all the TYBMS M6 student. In this particular paper, there were two practical sums which had appeared, and let us see how to solve those two practical sums. Okay. The very first question was Anita owes Neeta a sum of rupees 6,000 on 1st April to 2021. Anita gives a promissory note for the amount for 3 months to Neeta, who gets it discounted with her banker for 5760. On the due date, the bill is dishonored. The bank paid rupees 15 as noting charges. Anita then pays 2000 in cash and accepts a bill of exchange drawn on her for a balance together with interest as of 100. The bill of exchange is for 2 months, and on the due date, the bill is again dishonored, and Nita paid 15 as noting charges. Pass the journal entry to be recorded in the books of Nita. So we will have, this is a bill of exchange based sum. So we'll write in the books of Nita journal entry. Now, very simple. You just have to follow certain rules in this. Okay. Now, the very first thing is Anita had owed Nita amount of rupees 6,000, and on 1st April, Anita gives a promissory note for the amount of 3 months to Nita. Okay, so this is nothing but your bill of exchange has been drawn. Okay, you're drawing a bill of exchange basically. So the rule is, see, the logic is, now we are, in this case, we are all Nita. Okay, Anita has given us a promissory note, so that is nothing but bill receivable. Debit what comes in, credit the giver. Okay, debit what comes in, what is coming in, bill of exchange is coming in, or promissory note is coming in. That is nothing but bill receivable. And who is the giver? Anita is the giver, and the amount is 6,000. So the very first journal entry, okay, will be on 1st April 21, bill receivable account debit to Anita. 6,000 will be the amount on both the sides, being Anita's promissory note received. Okay, so that's the very first thing. Okay, you have got the bill. Now let's say we are Nita, we have got the bill, and now it's saying that Nita, who gets it discounted with a bank for 5760. Now that amount, that bill which we have got, we are discounting it with the bank. So the rule is, now see, logic is what, if I take that bill and give it to the bank will give me some money. He will deduct some discount, and the bill will be given to them. So debit what comes in. Here we are going to receive money from the bank. Okay, how much we are going to receive? We are going to receive 5760. The bill amount is 6,000. We are going to receive 5760. Mother 240 rupees will be the discounted value. Okay, so debit what comes in, bank account or cash account debit, money is coming in. Debit my expense, discount is an expense. Credit what goes out. What is going out in our case? The bill receivable is going out. So our entry will be on the same date. Bank account debit 5760, discount account debit 240, to bill receivable 6,000, being promissory note discounted, or the bill of exchange discounted. Okay. So that is how the first two entries were supposed to be. Now when we read ahead, it's given that on the due date. First, let us calculate or find the due date. Okay. Now the bill was drawn on 1st April 21. Due date is after 3 months, because it's a 3 months bill. So it's April, so May, June, and July. July will be the month. Now remember, whenever due date is formed, we always have 3 days grace. So first will become second, third, and fourth. So it will become 4th July 2021. The bill has gone dishonored. Now dishonored ka logic is very simple. Debit the defaulter, credit who got defaulted. In this case, who is the defaulter? Anita is the defaulter. And who has got defaulted? Who has got defaulted? Meaning, who has the bill right now? Currently, the bank has the bill, because we have discounted the bill with the bank. Okay. And the bank paid for 15 rupees as noting charges. The noting charges is nothing but your lawyer, the fee that you need to pay, okay, to get it notarized. Okay. Now, though here the bank is paying 15, but it will be recovered from Anita itself, because she is the one who has been dishonored in this case. Okay. So our entry, first the date, 4th July 21. Anita account debit, because debit the defaulter, credit who got defaulted is the bank. 6,000 was the value of the bill, and 15 rupees was the noting charges which got added in that. being promissory note dishonored and noting charges paid, which will be recovered from Anita. Okay. So that is what. So we are done till this part. On the due date, the bill is dishonored and the bank paid 15 as noting charges. Chalo, that is done. Now I will have to pay personally the bank whatever amount I had to pay, but that won't appear in this. Now it says that Anita then pays rupees 4,000, sorry, 2,000 in cash. She's making a part payment. Debit what comes in. Cash is coming in. Credit the giver Anita. Our next entry will be cash account debit to Anita. Same date, 4th July 2000, 2000 being part payment received. Okay, next, and accepts a new bill of exchange drawn on her for the balance. Now, balance is how much? 6,015 was that amount. 2,000 has been paid. So 4,015 is pending because see, this is also there, right? 15 is also had to be recovered from her. So 4,015 is the balance along with interest of 100. So first interest ka will pass the entry due amount. 100 is the interest due. Entry will be Anita account debit to interest 100 100. This is entry of interest due. It's not they're not getting the interest right now. It's just due entry. Now we need to make a new bill similar to the first entry. Okay, we made a new bill. We'll give it to her. She'll sign it and she'll give it back to us. So our entry will be BR account debit to Anita. Amount will be 4,015 plus 100 rupees because that was the interest. So 4,115 being 2 months acceptance given and received. Okay. Now, so chalo, we are done with this part. Now the bill is for 2 months. Okay, and on the due date. Now let us again calculate the due date. This is July. So August, September. So 7, 8, 9. So 9 will be the month. 4 is already the date of 5, 6, 7. 3 days grace. So 7 September will be the bill is again dishonored. Dishonored again the same thing. Debit the defaulter. Anita is a defaulter. Credit who got defaulted in this case? Now the bill is with us. So we can't write our name. We will write bill receivable here. Anita account debit to bill receivable 4115 4115 and we paid 15 as noting charges which will be recovered from Anita now. So my last entry will be Anita account debit to bank 1515 being noting charges recoverable from Anita. Oh, sorry, Anita. Yeah. So this is how you all had to pass the journal entry, okay, from this particular sum. A very simple sum. You just had to follow certain, logical entries. You just have to see what is coming in, what is going on, who is the receiver, who is the giver, who is the defaulted, who got defaulted. Okay. So this was the very first sum, practical sum, which was there in this particular paper. Okay, so I hope everyone have everyone have understood this. Chalo, now, along with this, the very next sum which was there in this, one last sum. Okay, now it's given here on 1st April 2018, Trend Limited purchase machinery from Reliance Limited on hire purchase basis. The cash price of the machine was 5 lakh. The payment was to made 1 lakh on the date of agreement. That is nothing but down payment. And the balance in 4 equal installment of 1 lakh plus interest at 8% payable on 31st March every year. The first installment being paid on 31st March 2019. Prepare machinery account, Reliance account in the books of trend, assuming that the accounts are closed on 31st March every year and depreciation is going to be 10% on original cost method or straight line method as we say. Now, here we have to prepare two different accounts. One is machinery and second one is Reliance account, that is the vendor account. First we'll prepare machinery account, very simple. In machinery account, you just have to remember two things. First, how much you bought the machinery, and second, every year what is going to be the depreciation. That's it. Now, machinery was purchased for 5 lakh. 10% of 5 lakh is on April and 31st March, so full year. 5 lakh ka 10% is going to be 50,000. That's it. Depreciation is 50,000. Original value of the machine is 5 lakh. So we'll write in the books of Trend Limited, machinery account, date particular amount, date particular amount. On 1st April 2018, to Reliance Limited, the machinery has been purchased from Reliance. Amount is 5 lakhs. So we noted on 5 lakhs. Now extreme right mein, by 31st March 2019 by depreciation 50,000. Okay, that's the depreciation on SLM method. Tally it 5 lakh minus 50, 4 lakh 50 is the balancing figure. Now they said we have to make it for 4 years because 4 annual installments have been paid. So 4 years that we have to make machinery account. The first year ka machinery account has been created. Now same way, it's just copy paste now. So second year will be whatever is the closing will become opening for the next year. Again on 31st March 20 by depreciation on SLM method. So the dep amount remains same 50,000. So 4 lakh 50 minus 50 is 4 lakh. That's the closing balance. Again, the same will be copied forward to the next year. So opening is 4 lakhs. Again, dep on 31st March 21 is 50,000. We tally, we get 3 lakh 50,000. And last on 1st April 21, okay, last year ka closing is this year ka opening, again 3 lakh 50. Okay, on 31st March, again we light buy depreciation 50,000. Again, we tally 3 lakh 50 minus 50 is 3 lakh. So our closing balance comes to 3 lakh rupees. Okay, so this is how you'll had to prepare machinery account. Now remember, in hire purchase, the first account is the first year ka account is the only the important one. After that, it's just copy paste, throughout the sum. Okay. So this was machinery account. Okay, I wanted to just go through it once, then we go ahead and we see how to create Reliance account. But for that, we'll also need to make some working note for calculation of interest. Okay. So I just wanted to go through this, and we'll start with that account. Okay, now let us start with the next part, creating Reliance Limited account. But for that, we'll have to create interest working. Okay, so calculation of interest. Our columns will be particulars, down payment. Four installments have been paid starting from 31st March 19, 31st March 20, 31st March 21, and 31st March 22. Particulars may we'll have opening cash, down payment or installment, interest at the rate of 8% because given 8%, cash price paid, and closing cash. Now remember, the original opening cash is 5 lakhs, and in the first year we have made a down payment of 1 lakh. Okay, so our entry will be opening cash is 5 lakh. We paid a cash amount of 1 lakh as down payment. So cash paid is only 1 lakh in this particular year at the start of the agreement. So our closing balance is 4 lakhs. Now, first year, the first column ka closing will become next column ka opening. So 4 lakh is our opening cash price. Okay, cash paid. Now we are going to pay installment of 1 lakh every year. So cash paid is 1 lakh. Okay. Now on 4 lakhs, you will find interest at the rate of 8%. So 4 lakh ka 8% is 32,000. So our total value of installment is amount paid plus interest. So 1 lakh 32,000 is the total installment value. From 4 lakh, 1 lakh has been paid from the principal value. So our balance is 3 lakh. Now it's just a copy paste. So closing will become opening of next year. 3 lakh ka 8% is 24,000. 1 lakh we have paid. So total installment is 1 lakh 24,000. 3 lakh minus 1 lakh is 2 lakh. 2 lakh closing. So next year ka opening is 2 lakh. 2 lakh ka 8% is 16,000. Plus 1 lakh we have paid installment. So the total installment comes to 1 lakh 16,000 with interest. 2 lakh minus 1 lakh is 1 lakh. 1 lakh becomes the opening. 1 lakh pay 8% is 8,000. 1 lakh is the last installment. Total amount installment is 1 lakh 8. So there is no balance. Balance has been cleared out. Okay. Now this is required for two reasons. Okay, because we needed to find the interest amount and we had to find the installment amount. Now let us start with the Reliance Limited account. Now first thing will always be, because in machinery we had written first to Reliance. So in Reliance it will become buy machinery on 1st April 5 lakh. On the right side only two things can come. One is the opening balance and second is the interest. For the first year the interest is 32,000. On the two side only two things can come. One, the down payment, which will only be in the first year, and after that only one thing will come, that is the installment value. So down payment was on 1st April 1 lakh, and then 31st March may we made a first installment of 1 lakh 32,000. We tally, we got the balance as 3 lakh. First year ka closing will become next year ka opening. Again on the buy side we'll only note down the interest, which is 24,000, and on the two side we'll write two bank account, the second installment 1 lakh 24,000. We tally, we get the balance as 2 lakhs. Again same way, third year mein last year ka closing is this year ka opening. So 2 lakh is opening. Interest was 16,000. On the debit side to bank, we write the installment of 1 lakh 16. Tally karke we got the value as 1 lakh. Last, okay, 1 lakh comes down. Interest was 8,000 and the installment value we paid is 1 lakh 8. So there is no balance. It's got tallied up 1 lakh 8,000 on either side. Okay, so this is how you all had to solve the sum based on hire purchase. So first we prepared machinery account and second we prepared the vendor's account. But for that we had to do one more calculation of interest. So I hope everyone have understood it. So with that we will be ending this video here. Thank you.